Good day. India's tax to GDP ratio at about 11% falls rightfully short of the sums required to endure the government's spending programs. These are considered necessary to bring about some form of social equity, or in the least, provide a better quality of life to the millions that comprise the lower income strata of society. Other Asian countries like China at 20%, Malaysia 16%, and Vietnam 14% spend far less on welfare and entitlement initiatives despite much higher tax revenues. Advanced economies such as the United Kingdom at 34% and the United States at 27% are in a totally different league. This brings about the question as to whether such sort of spending is sustainable without swelling the national debt to untenable levels. Government revenues are comprised of several elements. These include direct and indirect taxes, sale of assets in public enterprises, license fees such as those received in the sale of telecom spectrum to telecom companies, or mining concessions, etc. Ultimately, it all boils down to healthier tax collections and therefore a fine balance that ensures compliance and is workable in the long term. Very high taxes create either defiance dilemmas or quite simply businesses and people decide to migrate out of the country. Over the past 5 years, over 35,000 very rich business families have left, some of whom may have been tax dodgers, but still others honest business people. The finance budget increased taxes on the rich, and there are murmurs on bringing about inheritance and wealth taxes. Many countries have tried this, eventually succumbing to the realism that they create more compliance headaches. The issue really boils down to increasing the number of taxpayers and ensure ease of conformity where people willingly pay their due. Taxpayers in India rose from a measly 53 million in 2013 to about 85 million in 2018. Direct tax collections now aggregate 6% of GDP and have never actually been higher than 6.3%. Significantly, in the last 5 years, the ratio of personal income tax to corporation tax has jumped from 62% to 72%. And there are clearly limits as to how much more these can grow, considering the fact that agricultural income is not taxable and neither is that of individuals that earn below rupees 5 lakhs. According to estimates, the entire universe of assessees under the present dispensation cannot exceed 110 million or perhaps even a few notches lower. There are therefore limits to what growth personal income tax can deliver. Interestingly, the total income of all tax filers is estimated to be rupees 50 trillion, which amounts to a quarter of GDP. This group pays taxes of rupees 8 trillion, implying an average tax incidence of 15%. Assuming the poorest 80% earn no more than 20% of India's rupees 200 trillion GDP, this leaves rupees 160 trillion in the hands of the well-off population. If through a tweak in policy, the balance rupees 110 million could be brought into the net, even at half the current average rate, say of 7%, the additional income to the treasury would amount to rupees 8 trillion, aggregating to a total direct tax collection of rupees 16 trillion. Well, this changes the scenario drastically with a lot more spending leverage available to government. But this also means that everyone should pay taxes, even farmers and those who earn less than rupees 5 lakhs, albeit at much lower rates. The current dispensation to provide exemptions to large segments of society puts the burden unfairly on the very few who either comply, dodge, or migrate. Understandably, there are political compulsions, and large constituencies that have had a free ride for too long will resist any change. Historically, governments have picked the easier path by higher impositions on the rich, as their ability to swing elections is marginal. But in the end, national development also suffers, as do vital programs that are indispensable for a more equitable society. In the end, something will have to give. Thank you.